Welcome to the Greed Geek Podcast with your host, Jason Fern.
What is up, everybody, and welcome to episode 3 of the Greed Geek Podcast. We're back here to talk about cryptocurrency again. This was a hot topic. Everybody is really catching crypto fever, and we have some more questions. So with me today is my good buddy, Michael Aldape. Michael, why don't you introduce yourself and tell us, how you got started in crypto?
Sure thing. Happy to be here. So my name is Michael Aldape. I go by Mikey. I'm a senior software engineer by day and crypto enthusiast by night. I've been in crypto since 2013. It's when I first bought Bitcoin. And it's kind of taken over as a big hobby of mine. And just, I love to see it evolve. And I love the intersection of technology, game theory, finance, and, psychology. They're all intersecting with Bitcoin and blockchain technology. So that's what I'm passionate about. And I've learned a lot over the years.
Awesome. Thank you. We look very much forward to learning a bit from you today because both David and I are new into this crypto game. So we also have David Lomneck, longtime friend of mine, known him since high school. David, say what's up and kind of tell us your what you do for a living and your investment background.
Awesome. Yeah. So David Lomneck, thanks for having me on, Jason. I work for a local software company. I'm an associate vice president there. I've been trading stocks and investing heavily since probably about 2009, 2010. But about 2 to 3 weeks ago, I bought my first cryptocurrency. Got it right here. And learning and wanting to learn more. And of course, anytime you dive into something new, you got 1,000 questions. And so hopefully I can get some of those answered today.
Sounds great. Like I said, last week we did talk about crypto. A lot of people, enjoyed the episode. But today we want to dive a little bit deeper and kind of pry with some of those questions that maybe weren't answered the first time around. So this is where we started last time. I'm going to start here again and really get I know Mikey was really religious about this topic. Like, what is crypto and why is it important?
Yeah, so I think in simpler terms, I think we can start with crypto. What is crypto and Bitcoin? Like, what is it really? And I tell people, if you're just trying to wrap your head around this, think of it as a shared database with no one person in control. And so everyone is free to write to the database if they want, and everyone can read it at any time. And the database is being hosted by all these nodes, so it's decentralized. No one company or person or government is in control. So that brings us back to that concept of, you've probably heard before, of the ledger, the shared ledger. That's what all crypto, all blockchain and Bitcoin are based off of, that concept. So again, just think of it as like a blockchain is just a type of database. And the properties of that make it special are anyone can write to it, anyone can read it, it's decentralized. Hope I'm not missing any, but that's like in a nutshell. So
yeah, but so if anybody can read and write from it, the question you often get is, well, doesn't that mean everybody can just manipulate it, hack it, add their own thing to it? So why
Sure.
can't they do that?
That's a great question. Yeah, and this is why Bitcoin was so revolutionary, is because it finally solved that particular problem. And it's called the Byzantine general problem. I don't know if I'm pronouncing that right, but it's basically an old, computer science or like thought experiment type of thing of like, how can you trust other parties to stay in good faith and make good decisions for the overall ecosystem. And so Bitcoin solved that by this concept of nodes and basically mining. So that's what mining does. The way it started is one CPU means one vote. So your CPU is mining, you get a vote. So we see these transactions and each node, each computer gets a vote. Is that valid? Do we agree on that transaction? So these transactions are seen by all the nodes. And if someone tries to write something different, the majority of the nodes will be incompatible with that. They'll be like, no, that's wrong. And so the majority wins. And so the one real risk of like Bitcoin too, as you probably heard, is a 51% attack. That means if any one entity could control more than half of the votes, then they could potentially manipulate the blockchain, right, and give themselves more coins or allow double spends or something like that. But it's gotten so decentralized and so actually expensive for this hashing, for this mining, that's not really feasible anymore. Like it would cost so much money to take over 51%. You got to do the math and realize, if I take over, I'm going to get this many coins. Was that even worth it to do? And then beyond that, you've ruined the ecosystem in the long term. So you only, if you hack it one time, that's all you get, because no one's going to trust it anymore if you screw it up. So
or you'd have to hack so many different computers to do it. Yeah. But okay. So now we understand in concept what it is, like how how you write to it and how it's maybe unhackable. But why do we need it? I mean, we have dollars, like, and I can transfer dollars. I can use PayPal, transfer money. Like, why do we even need crypto in our lives?
My biggest problem with the dollar is the unlimited printing and the lack of transparency of why is it being printed and how much is really out there. We have figures, but the fact that more of it can just be printed into existence, in my mind, from a foundational perspective, is concerning. And Bitcoin offers something different. It offers true scarcity. And scarcity is a wonderful property of money, going all the way back to using gold, the gold standard. If we would stuck to the gold standard, I don't know if there'd be such an appetite for something like Bitcoin. But as we've seen with recent current events, I think people are the light bulb is starting to go off and being like, we don't want our currency to be debased or manipulated on a whim. And it's better that no one is in control, no government, no one company. It's a neutral thing. Bitcoin is very neutral. There's no creator to sue. There's no one to, you can't get rid of it. It's the cat's out of the bag. It's here.
Yeah.
But beyond that, I mean, it's digital. The cash is, you've seen ACH transfers and such. It's ridiculous that it's 2020 and it takes 3 days for them to clear or something like that. That's silly. So it's digital.
I mentioned last week, I think about what has value, and people say, why would that have value? But to me, things only have value because we impart value to it, because somebody's willing to accept it. The dollar is only worth something because somebody's willing to accept it. Gold is only worth something. A baseball card, like a Mickey Mantle piece of cardboard, why is that worth $50,000 or whatever? Because people are willing to pay for it. So in effect, this, just because it exists only in the digital realm, doesn't really change that. As long as people are willing to exchange it for goods or for value of some sort, it has value, right? David, I haven't been able to stump him yet. Why don't you try?
Well, you had a good leeway there into value, right? So what causes some of those spikes and dips that we see in the charts? You had some charts up earlier on your screen. What makes Bitcoin worth more today than it did yesterday and than it did last month or last year? And how can I watch for those in case, I want to buy some and I want to do it in a dip instead of at a peak?
Yeah, so this is the price action is interesting because we've never really lived through this kind of transformational technology before, where it's literally, we're repricing the world in Bitcoin real time. And so it's going to swing hard. And that's really what you've got to understand is we are in price discovery, and it could take 5 years. It could take 50 years for Bitcoin to finally level out. Like currencies today, you can trade currencies against currencies and they don't really change much in terms of percentage, right? The Forex is it's pretty mild compared to other things in terms of percentage. I think Bitcoin will get mild someday. It will level out. Personally, I think anywhere between 500K and $1 million per coin. It will level out, and we won't see these crazy swings. But right now we're in a macro price discovery. It is finding its value in the world. We're pricing all of the world in this new digital asset that's about a decade old. That's nothing in terms of human history. So it's finding its way is what's happening.
Well, you mentioned it kind of leveling out, and then you mentioned that Bitcoin is scarce, right? There's a limit. So you don't expect it to continue to increase as we either get closer to that limit or all the Bitcoins are out there?
No, that's a good point. Yeah. So the one thing that's, again, that's the scarcity gives it a tremendous amount of value. And we will, when I say level out, like I just mean the volatility is going to be much lower than it is today. But overall, you're right. I think it will continue to go up over time indefinitely. So we will eventually creep over that limit. And that's because the supply is actually will get smaller as time goes on, because people lose coins. People are holding. There's more people being born on the earth. Everyone's going to want to be a holder. It's limited supply versus.
Is it a holder or hodler? I'm just kidding.
Yeah. Either is good, but yeah. So I think there's infinite demand and limited supply on a longer term scale. So.
So those who don't know, they've capped out how many Bitcoins will ever be created. And so a certain amount is produced every year, and that amount will start to decrease over time until, I don't know, I'm sure you know what year, at a certain year, no more will ever be produced.
Yeah. In the year 2140, which is over 100 years from now, all the Bitcoins will be mined. That's 21 million. That will be it. That will be forever done. And that's one of the main properties of Bitcoin, is that hard cap. And a lot of people like to say, well, that can change. They can change the code. 100% right. Anyone can fork the code and change the numbers. But once you do that, it's not Bitcoin anymore.
It's Bitcoin.
You've created a fork. Exactly. And we've seen the precedent for that. It's Bitcoin Cash, Bitcoin's SV. There's Bitcoin Diamond. There's all these other ones that people have tried. But they're not recognized.
Let's talk about the risk a little bit, because that's the biggest knock on Bitcoin. Like, how can you possibly invest in something that could go down 80%? If you invested, for example, here at 14,000 and then saw it dip all the way into the threes at one point, like that's really disconcerting. So like now, then it got up to the 12, and then it went down here to where 6, and then now it's way up here, approaching 50,000 a Bitcoin. But if we look at history, that could turn into 10,000 a Bitcoin. So how do you stake your investment on a currency like that?
Yeah. So my personal answer is conviction. I believe that it has such strong properties of money that people will come around. People get scared. You saw that those dips. It happens every few years. There's always some new, some FUD, they call it, fear, uncertainty, doubt, that will come out. And because it's a relatively new technology, it affects the price. That's completely normal. You got to realize a lot of this is based in psychology. But the thing about it is the base principles of Bitcoin have never changed. They've always been what they are. And that's where the conviction comes from, that allows me to weather those dips.
I was going to say, I think the one thing to keep in mind is, this point right here looked pretty much exactly like this point did here at that time. Like right now, we're like, oh my God, there's no way it's accelerated this much. Like, but it looked the same here, and yet it did have this dip, but it came back, right? So you have to look at the overall trend.
Right.
The peaks are getting higher, and the dips are getting lower or getting higher as well, right?
Yeah. So if you zoom out even further on your chart, like going all the way back to 2000.
Webull doesn't let me, but
Webull. Okay. If you go to coinmarketcap.com or CoinGecko, you can see the full chart. And back in 2013 when I bought, there was a huge run up to about $1,200, and that was the big bubble. And everyone was like, this is a bubble, this is this or that. But if you look at it on the chart on the far left, that was the bubble back then. Look at a little blip that is now. So I think these other ones are going to be just like that. And so you have to realize, yes, it swings, because again, it swings hard because of price discovery and FUD, and it's a new thing that's figuring its place in the world.
And I mentioned last week, but like where I have my dot right there is where I posted on Facebook, and so that was November 24th. I was listening in audio only. February 24th, 2013, somewhere around there is when I was like, I should buy it. And it was like 180 a Bitcoin, and now I hate myself. But yeah, so long term, we got to zoom out and think about where this is going, where it has gone. And I think the exciting thing for Bitcoin enthusiasts is it's starting to get some mainstream support. You know, the longest time you watch CNBC, listen to any expert, still, I guarantee pretty much if you ask your financial advisor, they're going to tell you to stay away from it.
Sure.
But the billionaires are starting to jump in, the companies are starting to jump in. So, you know.
Yeah, and Jason, that reminded me, if I may, there's a common criticism too of Bitcoin is how can it be digital cash when, you know, it's expensive, relatively expensive to transfer and slow. I mean like 10 minutes. Whereas if you're going to use it as cash, you need it instant, right? Like point of sale, you want to be transferred instantly, and that's what credit cards do for us today. But I think it's important to realize, well, first of all, there's second layers of technology called, one of them is the Lightning Network that could enable that. But even if we never did that, even if we never changed or tried to improve Bitcoin's properties, it still has value as digital gold in my mind, as a store of value, because gold has value today. But if you take gold to a McDonald's, they're not going to take it, and you could prove to them that it's real and everything, they're still not going to take it. They don't want to deal in gold, but yet gold still has value, and it should. So Bitcoin's similar in that fashion.
Yeah. Okay. So that's a good transition. I'm going to change our planned outline here a little bit. I'm going to pass it to David because David has some questions, because David is very confused about, maybe just me actually, XLA and Neo and Chainlink. And David was just telling me how he just doesn't know this. No, I'm just kidding. No, but seriously, David, you know, you were asking some questions about altcoins, so I'll pass it off.
Yeah, sure. Well, I mean, so I was just dabbling and learning about the scarcity thing, but then I saw some coins, they can be created forever, right? And some of them don't have scarcity. You know, what's different between the coins? Why would I care about Litecoin versus Bitcoin versus, you know, any meme coin or altcoin that's out there? What makes one worth more than the other? Or why should I even look at them, or should I just stick with Bitcoin?
Short answer for beginners is stick with Bitcoin. That's going to be like your blue chip safe bet when it comes to crypto. I can almost guarantee you it's going to go up over time, and it will appreciate in value. Now, the altcoins, all of them are experiments, and so is Bitcoin. They're all experiments, and everyone's trying to tweak the properties of a cryptocurrency, you know, whether that be hard cap, speed, nodes, who can validate, and trying to come up with a better Bitcoin, a better money, perhaps. But none have been able to dethrone it. And the common problem is, I personally think, is a lot of these coins probably are not needed. Bitcoin can serve the purpose, or these coins, they're too tied like to a company or to a person. And that's a vulnerability in my mind that makes the coin weaker. And Bitcoin's one of the very few where the creator is completely gone. There's no one person in control. I think that's very special property of it.
Yeah. I mean, but you go into the Twitter sphere or whatever, and you can find a bunch of fanboys behind all these different things. You're clearly a fanboy of Bitcoin, right? So, and one thing I noticed is that Ethereum, if I go anywhere from 1 month to like 3 years, Ethereum actually has a better return on investment. So what did you say?
Yeah. So I'm about an 80% Bitcoin maximalist. You'll hear that term in the space as a Bitcoin maxi, and somewhere 100% where that's Bitcoin's all they're concerned with. Everything else is trash. I'm about 80-20. So I think there are some coins that provide value that Bitcoin can't do right now. And one of those is Ethereum, as much as people like to hate on Ethereum, because it offers, you can do things on it right now that you can't do on Bitcoin. And we can talk about those later, basically with smart contracts. But, and so a lot of these coins are just different takes on smart contracts. Some, people complain about Ethereum because its fees are expensive or it's too slow. So they make their own, they try their own. This is all just competitors, and there's room for multiple. I think there's multiple winners. I don't think there's going to be like one coin that wins it all. Like I think Bitcoin is going to win it all in terms of the money category, like being money, being a store of value. But there's room for these other coins to like host these smart contracts and like do different things. There's room for that.
So what do you do with your 20% personally?
Yeah, my 20%, I like to dabble on Ethereum basically, and any viable Ethereum competitors, which I would say there are very few, very few. And so what I like, and so the Ethereum, I don't know how familiar y'all are, but Ethereum can actually, it hosts other coins in effect. So they're called ERC20 coins, and they're on Ethereum only basically. And so they're just more coins. So
Whenever
Ethereum allows you to mint your own coins basically.
Okay.
So you could create your own, Jason coin on Ethereum, and it would be an ERC20 coin. And the reason people do this is because they want their coin to like represent something on their service, or you can think of it as kind of like a Chuck E. Cheese versus main event scenario. They each have their own currencies, and they're each valuable in their own space, but they're different, and that's okay. You can have main event or Dave and Buster's, and use their coins. But when you leave the Dave and Buster's, maybe you want to get into Ethereum, which is neutral, and take it over to Chuck E. Cheese and use their thing. And maybe Chuck E. Cheese coin goes up a little bit faster than the Dave and Buster's coin, that type of thing. But
and don't they use Ethereum because of the nature of the blockchain where you can't alter it? You also use it for like anytime you need any kind of ledger, right? Of like proof that this thing happened at this time or whatever, right? Is that right?
Right. Yeah, totally. So yeah, the thing that Ethereum offers you, so a lot of these coins, the whole premise of Ethereum is like, it's this platform where people don't need to, it's like a framework almost. It's the blockchain plus a framework where you don't need to spin up your own blockchain if you want your own coin. Just use Ethereum. That's part of the sell. Like, you don't need your own blockchain if you're just trying to create a cryptocurrency to get those properties that you're talking about. You don't need to create your own. You don't need to roll your own. You can create one on Ethereum.
I do want to be careful we don't go too deep for this. We do want to keep this high level, but I definitely appreciate the context there. I'm going to rein myself in a little bit here. So, David, I'm going to pass it off to you again because I know you had some questions as well. We were talking earlier before the show about PayPal versus whatever. Tell us about your PayPal experience and what you're doing now. And
well, yeah. So I mean, I saw PayPal was doing cryptocurrency. I moved some money over and I bought some, and then I watched your podcast. I learned about derivative markets and how with PayPal I'm not actually owning the coin. It's just basically PayPal's owning the coin on my behalf, but it's not really mine, and so I'm stuck. And so I was like, well, I'm going to get out of this. And I went to sell. They put a 14-day hold on my money when I sold. And I've been chatting with them for like days, trying to find out why they keep, give me the runaround. They said there's various reasons. I said, well, tell me one of them. They say they can't. So I'm out. PayPal's never going to get my money.
PayPal's dead.
Currency again. Yeah, I'm leaving them behind.
So I went
into BlockFi, and so far I like everything I see there. We did talk about how hard it is to move money around because of how long it takes, 3 or 4 days for these ACHs and stuff. So that's a pain. I do want to go back to kind of a question that popped into my head, Mikey, when you were talking a little bit earlier about being, more of like into the Bitcoin, being a big proponent of it. Would you say at your soul, at where you are you doing this because you're wanting it to replace money? Or are you doing this because you see this as an ability to maybe make some money and help to make your financial future more stable?
Absolutely the first one, dude. I think creating a better money is such a powerful concept, and to be part of that in history is like a once in a generation, if that type of thing. Like, we've never seen anything like this, and I think it has such big macro potential and consequences for a better world. But with better money, I think we can create a better world, and that's what I'm in it for. And if I'm rewarded for being an early participant in that, all the better.
Nice.
I'm only in it to make money personally.
Well, I mean, I feel like there's probably two strong camps there, right? People are looking at these spikes, or they're doing the research like you've done on these charts, and they go, hey, is this thing going to spike again tomorrow? Is this where I'm going to go and look back 5 years and say, man, I wish I'd have put $1,000 in this 5 years ago, it'd be worth 20,000 today, right? So and I feel like I'm probably there too. I feel like at this point in time, I'm looking to probably take advantage of some of these dips, move some money over there, get some faster growth than what I'm seeing in the market and mutual funds and ETFs. And so, in my mind, I'm always like, well, when's the best time to invest? Well, it's almost always today, because in the future, you almost always look back and go, 5 years ago, it was $3,000 a coin, and now it's, $40,000 a coin. I wish I could have done it. Well, in 5 more years, it would, it could be $100,000 a coin or $200,000 a coin. So do you have any advice for somebody who is looking to maybe try to figure out when the best time to get in? Like, I hear these terms of pullbacks, and you'll see these huge spikes and down. So
I get this question so much from like newbies, and those are all great points. Everyone feels like they missed it, and that's part of the reason they chase altcoins, is because they want to get something cheap and hope they can ride it up like Bitcoin. But they're just not the same. And you got to realize you haven't missed it. It's not too late. I told you it's going to $1 million a coin. Like it's almost, think about the risk reward. You put in $1,000, like you said, it could turn into 20,000, or you just lose $1,000. You should always, invest what you can afford to lose. If you lose $1,000, that's not going to change your lifestyle. It's okay. And so it just makes a lot of sense to take on the risk, because the risk reward is such a great payoff. Now, what I recommend is, like you said, the best time to plant a tree was 20 years ago. Second best time is right now.
Yeah.
So you got to get started. You got to get started. Throw in $500, $100, and I recommend dollar cost averaging. I buy every month personally. Like, I just have this on Gemini. I have an auto recurring buy, and you forget about it, and then you look back on it in a couple of years, and you're like, that appreciated well, So that's all there is to it. It's just get started and just put in monthly buys. It's just an investment like any other.
Yeah. It seems like a lot of those altcoins are kind of reminiscent of penny stocks, right? You could buy 100,000 of this altcoin, maybe it's Dogecoin, whatever, and you only spend like $100. You got so many of these coins, and then one day it disappears and it goes to zero, right? Or you think, oh man, if this thing just goes up a penny, I'm going to be rich, beyond my wildest dreams. So I can see why a lot of people are enticed to jump into some of these
thing, right? The Wall Street Bets is invading crypto now as well.
Yeah. So Mikey, how often, or have you ever taken withdrawals from any of your Bitcoin accounts, converted it into, say, cash that you could use to, buy a car or groceries or something?
Yeah, that's a great question. And people always ask, like, when do you sell? Like, what's the point if you just have it and you never sell it? Well, first of all, part of the point is I will be happy to spend my Bitcoin once I feel it has reached fair market value, which again, $1 million a coin. I'll be happy to spend it then. But in the meantime, you got to have a trade-off. I do sell from time to time to buy other assets. So like the home I'm in right now, the down payment was partly funded by Bitcoin profits, for example. So I don't recommend, selling. If you're just going to sit in it in cash and sell it for no reason, I don't think that's great. I wouldn't hold cash right now. But if you're going to buy something else, another asset, perhaps a down payment, like a car, you said if you want to buy a car cash, go for it. If you want to treat yourself and buy a boat, go for it. So if you want to treat yourself, are you all in on crypto, or are you also like spreading your portfolio into stocks and everything like that? I spread it around, but I'm like way, like 80% of my net worth is crypto. Wow. So
yeah, see, so like I've been following. One day I'm going to learn to say his name, but Chatmath Palihapitiya.
I love that guy. Yeah,
I think he's a genius. Like this billionaire early investor on Facebook. I love every interview I see of him, and his philosophy is you put 1% of your portfolio into it as pretty much a hedge against the economy, blowing up or whatever. And if you happen to get gains out of it, you get gains out of it. But 1%. So right now, in my mind, I'm going to try to go between 1 and 3% of my portfolio, and then like once I establish that, I'm going to add. So am I crazy for doing that and not going hardcore on it?
No, that's safe. I don't recommend what people do what I'm doing. I'm young. I don't have a family, and so I can kind of play a little more risky. But yeah, I would say between anywhere between 1% and 10% is where I would say. That's just like minimum. Like if you're super conservative, just do 1%. Because that's still going to give you outsized returns versus ignoring it.
Yeah. And again, from his perspective, it's like, hey, what if the dollar goes away? Which could happen, right? Like in our
Nothing lasts
lifetime,
forever.
it could happen, right?
Yeah, and if you look at there's a chart which shows like the average length of reserve currencies in the past, and there's been like a handful of what is considered reserve currency, and the dollar's coming up on about two or it's coming up on its time basically. I can't remember how many years, but it's basically like 20 or 40 more years, and that will be the longest reserve currency we've ever seen, maybe something like that. So it's definitely something to think about, something to ponder about, and I wouldn't do nothing. I wouldn't sit on your hands when you've got alternatives.
Yeah.
And again, you don't need to go all in on the alternative,
and I think that
but you
sounds
need to hedge.
crazy to some people, right? To
I know,
say that,
yeah.
but the fact that we do keep printing money, we go further and further. How many trillions of dollars are we in debt? I mean, at some point, it's a house of cards that does have to fall. Something has to change. That's not sustainable, right?
That's my personal view. Yeah. And to say that America, I love America, we're great, but to say that we're the world superpower, end all be all forever, I think is dangerous thinking. Like we need to hedge, you know. I think it's smart.
And one of the really interesting things about crypto is the global nature of that, which is I think also potentially where you're going with that. Like, and it's getting a lot of adoption in some of these other countries that maybe aren't as well banked as the United States.
Sure. Yeah, I think it's an opportunity for smaller countries or countries that want to become the de facto world power is to leverage something like Bitcoin, you know, that can give you the upper hand. And that's why personally, I would love to see the U.S. government like incentivize mining and incentivize buying Bitcoin and keeping it on the U.S. government balance sheet. I think would be very smart as a hedge. Again, we're talking about that 51% attack. You know, a lot of people say, well, China already controls 50% of the mining. Well, whose fault is that? You know, like we need to compete. We need to be part of the game here. So I think on a larger scale, like it would be nice to think like that, as in terms of helping our country out, like being competitive on the world stage and innovative. But some politicians see it differently.
I got one more question along those lines, and then maybe we'll move on. You know, there's some headlines lately where India is looking to ban Bitcoin, and I forget which country, a country in Africa, also is making moves.
I think it's Nigeria.
So, I mean, how much of a risk is that if, like, the United States or some of these other large countries, you know, what do you think about that?
They could totally try. I mean, I think it will be about as successful as the war on drugs. And the drugs are winning if you haven't checked. So like it would be like stopping the internet, like like policing it. It's not worth, the cat's already out of the bag. If they wanted to ban it, it should have been long ago. And it's too hard now. I don't think it's practically feasible. And I think there's actually enough clout within the lobbying scenario, where crypto has created thousands of jobs, tens of thousands of jobs here in the US and abroad. And to completely shut down the industry and cripple innovation like that, I don't think is American. There are a few senators or Congress people, I believe, that are pro Bitcoin, and some of them outspoken pro Bitcoin. I think there's someone from Wyoming, can't remember her name, but and there are some that are neutral, that are saying, like what I'm saying, the cat's out of the bag. We shouldn't fight it. We should try to work with it. So yeah, I mean, yeah. So regulation is definitely a threat, but I also think if they completely put a stop on it, like they did with, for example, alcohol back in the 20s or whenever that was, guess what? It came back because they realized that is just a losing battle. And
yeah, of course, some countries, you know, trying to shut down vast parts of the internet, right? So
sure, but here I think that just makes it that doesn't mean people aren't using it in China though. They're just under the radar, and I think it's more valuable in China. It becomes people want what they can't have, and so I think if you're just going to pay a premium in China, I think that's all that means.
Yeah. All right. So let's go back to the topic about, you know, where to invest this. So, you know, we heard about David's bad experience with PayPal. You know, I've got some friends who are doing Robinhood. I've traded a little bit on Webull, but then you have places. So those are all what we said last week is derivatives. Like you don't really own those. You're just kind of borrowing them. But then you have so we know those are bad. We talked about that. I got to wean myself off of PayPal eventually. But then we have like Coinbase, which has been around the longest, Binance, and then some that are earning interest like BlockFi and Gemini. Like, and there's so many other ones. To you, Mikey, like what is the difference between them? Like what should we keep in mind when choosing?
Well, I mean, the biggest difference between PayPal and some of those other you mentioned are they don't let you transfer out your coins, right? You got to stay within the PayPal ecosystem, which is completely, anti ideals of Bitcoin in the first place. Yeah. You should be able to completely take self-custody of it into your wallet, in your control, and hold what you call your private keys. If you can't do that, then don't buy on that platform.
So that's PayPal, Robinhood, Webull. Strike those out.
I would not buy on those platforms simply because you can't move it off. If you want to play the altcoin casino and bet on Dogecoin and Robinhood, go for it. But if you're serious about Bitcoin and long term, you got to get it off the exchange.
So would you potentially use those then for if you're just trading in and out, like almost day trading or crypto? Or you're saying those are okay for that?
Sure. I mean, if you want. I mean, that's not how I play Bitcoin in general. I don't trade it. I don't want to lose any. I only want to stack more. I'm not interested in potentially losing it. So I don't trade like that. I just hold it. I just buy recurring and hold. And so that's why, Coinbase, Gemini, Binance will all let you withdraw. And I think the differences between those are really just comes down to like preference, Uber and Lyft, it doesn't really matter. Some people have political things with those companies or whatever. Binance, I don't really trust Binance 100% because it is a Chinese company. I'm just wary of it. I'd rather use an American company. Why not stay
local, I've heard a lot of
right?
people say that. Make sure it's whatever one you use is based in the U.S.
If you want to be the safest, just use one that's in the U.S. I personally I have Gemini and Coinbase. I use Gemini most of the time.
Okay. So. Yeah. So I will say that I have done a little bit of trading on Webull and actually made some money just like because of how volatile it is. You have to wait. It's a little bit harder than stocks because you can't just like buy and sell at like the last price. You're like actually, buying high and selling low. So you have to like wait till it moves enough to overcome the spread a little bit on those. But you can make some money on that. But yeah, like you said, it's probably not good to buy and hold.
I mean, again, it's the altcoin casino. You can definitely make money. Yeah. I mean, I've gotten lucky. People get lucky all the time with altcoins. But if you're not a trader, I don't recommend that. I mean, it's just most people are not traders.
You're saying they shouldn't try to be. You're not in Doge.
Yeah, no, I'm not in Doge. I've been burned by Doge before. I know how that coin works. It always goes back down, so I don't touch it.
So David, I'm going to pass the baton to you along those lines of conversation.
Yeah. When we talk about the things going up and down and we talk about day trading, right, with stocks, maybe I'm not the greatest trader, but I kind of know what to look for, right? You're looking for news, you're looking for hype, you're looking for volume, and you buy, when those triggers kind of happen. And I'm so new to Bitcoin, I don't know any of those triggers. Obviously, I know that Elon Musk caused a really big fiasco last week with buying 1.5 billion. But is that the only way? Is that the only thing I can like look for? Or is there like, other markers or other things that cause the value of it to kind of go up and down?
Sure. I mean, they move, they will respond. These coins will respond to news, just like stocks do. They'll respond to innovation. They'll respond to regulation. So I think that's a good start. But I think Bitcoin is different in the fact of like, us having this conversation and knowing about Bitcoin early enough is there's actually nothing about Bitcoin to wait for. There's no news in my mind because I know it's going up. And all I'm waiting for is the people around me to finally realize it. That's it. So Bitcoin's different in that regard. But yeah, a lot of these coins will move. Sometimes, for these other altcoins, if they get a lot of users, if there's a lot of activity, more volume than normal, they can go up. If they announce a partnership, maybe the golden partnership would be like with an Apple or a Google. Obviously, they'll go up. They're really just looking for acceptance and usage. Anything that does for a coin, I guess, is probably going to go up.
But ultimately, if we're talking about a buy and hold strategy, it doesn't really matter too much because you're not really paying attention to those.
Right. That's where I'm at, right? With Bitcoin. Now, if you want to trade on the other ones, they are more sensitive to stuff like that in my mind. But yeah, those were good indicators, David.
Would you say it's similar to stocks in that if a lot of people start selling, the stock price, goes down, and if a lot of people start buying, the stock price goes up? If people are getting in and out of the Bitcoin market, does that affect prices too?
100%. Yeah. I mean, all these coins, I think, are it's honestly purely, what's kind of the beauty of it is it's purely supply and demand, which is it's interesting to think about, because a lot of people say nothing is backing Bitcoin. That's kind of true, but so it's purely supply and demand. So if people all wake up one day and decide to sell it, it's going to go down.
Yeah, I mean, I have Binance up on the screen right now, so we actually see. I mean, it looks exactly like the stock market does, right? We have the buyers and we have the sellers, and what I have on the screen for those on the pod is just the real time sell list. So you see the same thing it would in stocks: people buying, people selling. You see every single trade.
Yep.
Nice. Now, it wasn't that long ago when cryptocurrency, Bitcoin, kind of got a bad rap being, used for underground purchases, illegal purchases, things like that. The whole concept of it being untraceable, stuff like that. Would you say that it still has some of that stigma, or do you think it's getting, or has it overcome that and become full-fledged legitimized?
Yeah, I still think that stigma lingers on. But for those who have done their research on the topic, realize that, first of all, Bitcoin is traceable. It's not truly anonymous. There's ways to track you down, which is actually a weakness in my mind of Bitcoin that they're working on. And then what was the question again? Do
you think it's legitimized now among groups of people, or it has that stigma? Like if I go and tell a group of friends, hey, I'm buying Bitcoin, are they going to be like, oh, it's cool, new technology, I'm excited about it? Or are they going to be like, what are you doing with that Bitcoin?
Right. Okay. Yeah. So I think the stigma is still there, but it's wearing off. And I think that's what people are excited about. When these big players come in, like Ray Dalio, he's obviously a very thoughtful person and a careful person. And so when he says he's thinking about putting Bitcoin in his portfolio for his company, like that's big, and that gets rid of those stigmas. And then, okay, so here's where I lost my train of thought was once people do the research, they realize, first of all, cash, the US dollar is the #1 currency used in criminal organizations around the world. Okay, it far outpaces Bitcoin in terms of funding bad things. So it's not really a fair argument. It's easy to say Bitcoin's being used for that. And yeah, it is, but so is cash. And that's just a function of money. We're not going to be able to stop bad people from doing bad things because it's just a utility. It's just a technology. It's just like a dollar bill. Should we ban dollar bills? Because first of all, cash is actually less traceable than Bitcoin. I mean, I could take my cash, my physical paper, and like do things with it, and no one would ever know. Can't do that on the Bitcoin blockchain.
Yeah. Well, and what we're seeing right now is a lot of the mainstream players like Visa and MasterCard and such are talking about getting to this area. Like it's going to be legitimized.
Right. And so I think what's going to happen is there's going to be these legal rails that regulators are going to allow, which is companies basically having some level of tracking of your transactions. You might have to register your address or something, and so they can kind of follow you around. That will probably be permitted. And they might, I don't want to see this, but they might make it illegal for you to use a mixer, which basically mixes up your coins and anonymizes them. Or maybe it's illegal to create a Bitcoin address and use it freely, which I think is absurd, by the way. I'm just saying that it's not black and white. The regulations are not black and white. They can coexist with our current stuff, with our current infrastructure.
And speaking of being legitimized, one of the things I'm excited to see is interest-bearing accounts with crypto.
Those are the
so
hot
we
things.
mentioned BlockFi.
Yeah.
We mentioned BlockFi earlier, and also Gemini Earn, and there's countless of them out there now that can pay really great interest rates. Like if you keep it so just first of all, there's a thing called stable coins. You guys know that it's basically like holding cash. It's like bound 1-to-1 with a dollar. So you can keep it in stable coin. And with BlockFi, at least you earn 8.6% interest, which, the best savings accounts are paying like 0.5% interest. So it's incredible. And with even holding Bitcoin, they're paying 6% interest on Bitcoin. So not only do you get the benefit of any gains in Bitcoin, but you're making 6% on the way, and it compounds, it compounds, it compounds. So my question is that legit? Like, it's almost like, it seems too good to be true, Mikey. Am I going to lose my money on BlockFi, or what's going on?
Probably not on BlockFi. I mean, they've been around for a while. They're trustworthy. I think, like Gemini Earn will be good. There are other platforms who've tried this that I would not trust with my Bitcoin at all. The reason it pays out what it pays out is because, first of all, there's not a whole lot of Bitcoin to lend, right? These platforms are still relatively small when it comes in terms of like financial size. So that, as more people lend, I think we'll see rates go down. But you're also getting paid that rate for the risk of them losing your coins. Because when you put your coins into these accounts, you are no longer in control of your private keys. You've given custody to them, and they're going to lend it out. And you better hope that they don't mess up or get hacked or something, because then your coins are gone. So you're being rewarded for your risk. You got to realize that.
So what do you recommend then? So is it, rather than putting all my crypto, if I'm going to do interest accounts, do you recommend, instead of putting like all my stuff in BlockFi and earning interest there, like, do I like spread it between like BlockFi and Gemini or whatever? So I like spread out my risk, or like, what do I do?
That's one way to do it. I would personally only allocate maybe less than half of my crypto, like of my Bitcoin, into a platform like this at all, because I just don't want to risk my whole stack in one of these platforms. It's just the counterparty risk. The risk is too big in my mind. And what's the point of 6% interest when the Bitcoin itself is going to appreciate over 10x, in 5 or 10 years? I don't even need that interest. It's not worth the risk in my mind. But it does have a purpose, and I think there's good reasons. If you're going to hold the coins, might as well earn interest on them, right?
I mean, I would argue, though, the benefit is the compounding element, right? If you're going to make 6%, it's going to compound. I'm going to have double what I would in 7 years anyway. And if I have double times 10, like,
you're right. Yeah, that's totally. Yeah. I mean, that's an argument for it. And I think you just got to consider the risk. And that's why I wouldn't do all my coins, because I would only do like half or less, and earn interest on those than risk it all, basically.
So then, Mikey, how many coins do you have that are in cold storage versus what you have in these platforms?
About 90% of my coins are in cold storage.
Wow.
Yeah. Wow. I have a hardware wallet, because again, I'm a long-term holder. I have no interest in like selling those, and I don't want them sitting on an exchange, because when they're on an exchange, the exchange itself can be hacked, not Bitcoin, but the exchange itself can be vulnerable, and your coins could be gone. That you're not in control of your keys when it's on the exchange.
Do you mind sharing how you're keeping them safe in cold storage? I mean, so what does that look like for you?
Yeah, so I use hardware wallets. I have a Ledger and I have a Trezor. Those are two big popular ones. Another popular one is called Cold Card, which looks like a little calculator, but it's just for holding Bitcoins, basically, in your private key. And so I would recommend something like that for long-term storage.
So do you have just like the one hardware item? Like, what happens if that thing burns up in a fire in your house or something?
Yeah, good point. So you can back it up with writing what they call the seed words on a little paper card that they give you. And these words are basically what define your private key in English words. So you can commit those to memory. There's about 24, 25, depending on or 12, depending on what hardware wallet you're using. Or you can make a copy of that and put it somewhere super safe that's not in the same physical place as your hardware wallet. Yeah.
Okay. So
and then here's a more advanced way, actually. That's okay, that's good. But a better way is, because technically that little piece of paper could get burned up or stolen or something. The best way to keep your coins safe is called Multisig, which means like we could all participate in a Multisig right here, where it's got 3 of us, and it requires 2 out of 3 of us to sign the transaction to move coins. So you could give one to someone you trust and keep one in a bank what's it called?
Safe deposit box?
Yeah, safe deposit box, or bury it in your backyard or something. And so if anyone ever finds it, it's like they can't do anything with it on their own. They're going to need 2 out of 3 parties to sign.
Okay. So that keeps somebody from like breaking in your house and like stealing your wallet.
Right. So you would have 2 of them. You could do whatever you wanted, but if something happened, you call your friend, say, "Hey, something happened. Can you help me out?"
Yep.
And hopefully they help you out.
Yeah.
I mean, that's cool. I'm thinking about, again, the new investor like me into this, and it seems really complicated. Like how do you actually even go about doing that? Like, where do you buy these things, and how do you transfer to it? Like, I have no idea.
That's a big hurdle right now, right? It is complex, and it's not easy for a normal person to set up multisig. And that's where the opportunity lies a lot for a lot of these companies, is to help people do that. And so we're seeing companies, there's one, they're expensive, but it's called Casa, and they offer multisig. Like, they will hold a key, and then they will give you a key and another key to give to 2 other parties. And so you can always, like, if you have a key, you can always call them up and be like, "Hey, I'm ready to move money," or you can call your friend and say, "Hey, I'm ready to move money." But they're basically like a safe, like, custodian. But they're expensive, and I think in time we'll see better user interfaces, better hardware wallets that will make this easier, so easy that your grandma can do it. But we're just not there. And I don't really have an answer for you yet, Jason, because it does require some expertise.
So one thing on BlockFi that I noticed is that they have like address locks. I forget exactly what they call it. Basically, it limits where your money can be transferred. And I think the idea behind that is that it prevents somebody from hacking your account, like transferring the money to them, right?
That prevents them from moving your funds off BlockFi. That's great. But I think we're talking about if you're not using any of these platforms, you're just holding keys in cold storage.
Yeah.
You can't blacklist addresses natively with Bitcoin. You know what I mean? Like, you can't say only withdraw coins to this address. That's something that BlockFi is doing, and that's something Gemini will do for you. But that's not something Bitcoin offers at its base layer.
Jason, it sounds like we could have a whole podcast just on cold storage.
I know, man.
I think it's super important, and it's also, you got to think about passing along your coins when it's your time to go. You don't want these coins to disappear. Like, they're going to be worth a lot. Give them to your kids and your grandkids, and you need a plan in place for that to happen, right? And so I think that is also a huge opportunity, because it's only been around 10 years. Not a lot of holders have died yet. But once that starts happening and coins get lost, there's going to be a serious need for, like, understanding how to back up and pass it along.
Yeah. Sounds like a estate attorney could be one of your 3. And, and then if anything ever happens to you, they could use that to get to your funds for inheritance.
Totally.
All right. So just wrapping up, just for somebody who is not yet in anything, what is the first thing that you would tell them, like, go here, set up this, do this? What would you say?
I would recommend Gemini. I used to recommend Coinbase, but they've been giving people trouble lately. So I would say go to Gemini, create an account, and then connect your bank account. And I know that scares a lot of people, but it's safe. It's fine. Never had a problem with them taking money that they're not supposed to take. So that's it. And then throw in $100. Just get the ball rolling and get a feel for it. The best way to learn crypto and to get it is to use it. And, like, once you start using it, and, well, first of all, once you start seeing the price action, that's fun, right? But then, once you start using it, and the next step would be to take that $100 you have and move it to your own wallet, whether that's on your computer or hardware wallet, like we were talking about. That's the next step. And that's when things really start clicking. I have a buddy, he was my neighbor, and I convinced him to buy at 10K a coin. He didn't get around to buying until almost 20K. But he got a hardware wallet. He got on Gemini, and he was like, I sold him on being a long-term holder. He's like, I want to put this on a hardware wallet and get it off. He'd never done this before. Got on Gemini, did his buys, and moved it to his ledger. The ledger actually has a really good UI, UX. That part's relatively straightforward. But it's just about doing it. Once you just do it a little bit, do it with small amounts, it'll start to click. And
one thing that Gemini has is they have the automation right? Where you can set up regular
Recurring.
interval. Now you've linked it to your bank account.
Yeah.
You can figure. Okay, so here's what I would say: you want to get started, get your first seed in there, get something going, and then decide based on your budget and your salary, just like you maybe do a savings, or hopefully you're doing savings, your 401k. Decide what percentage of your every paycheck you want to allocate, right? And then with Gemini or other services, you can automate that. So $100 a month or $100 a paycheck comes out and goes into this, and just build it up and start to have your nest egg going.
That's what I recommend. Just start like that, and then once it gets to a sizable amount that's meaningful, like it's 5K or something, it's time to get a hardware wallet, and move it off. But you don't need to start there, right? I think what you're saying, just start with a small seed amount in Gemini and just set up recurring buys, get a feel for the price action and how it works. I think is a great place to start.
Awesome. Hey, David, you got any other questions?
No, I think I've pretty much exhausted my my questions until I can get in and dig some more.
Okay.
What are you gonna do next, David? Like what after this conversation? What is it?
Well, I had seeded BlockFi with a small amount, and so I think I'm going to set up an account that I can kind of feed into BlockFi a little bit stronger and do some dollar cost averaging. I like Bitcoin. I'm probably going to also, because I'd done a Bitcoin and Litecoin purchase for my first two, and Litecoin was doing really good this past week. So it's hard to not want to give some love to Litecoin a little bit, especially seeing the spikes in that compared to Bitcoin. But yeah, Bitcoin seems like your blue chip, you're stable. So
right.
Just kind of getting, like you said, dollar cost averaging, just every period getting something into there, and that's going to be my next step. And if I outgrow BlockFi, or if I see something cool in Gemini that I want to start taking advantage of, I'd probably open up a second over there too, just so that I can spread the risk, as you said, a little bit and just get more experience.
That's actually a good point I'll give to beginners. Is it's actually a good idea to set up an account on at least 2 exchanges when it comes time to cash out, because a lot of times Coinbase will go down or something, and you want to move money around to your bank account. Like I'm talking USD. Well, if you've only set up with them, you're kind of screwed. The verification process takes days, so it's not like you can just whip open Gemini and send your coins there and expect to cash out the same day a meaningful amount. It's just not going to happen. So I would set up at least two rails to your bank account, just in case, just an emergency.
Well, David will fight me with this, but I've got some ref codes for for both Gemini and BlockFi. If anybody wants to get, we both.
Hey, I used your ref code for BlockFi, so
I know you did. I got $10 in free Bitcoin from that.
There you go.
Yeah.
So we can share those out afterwards. Hey guys, I really appreciate it. I just want to plug that we subscribe to us on YouTube, as well as follow us on Twitter, on Facebook, and on Twitch. Appreciate you guys being with us, and we're out. Go invest.
Awesome. Thank you, Jason.